Welcome, everybody. This is the Thursday evening Viper Trading webinar. If you are here to learn how to trade the futures markets using the Viper tools, you are absolutely in the right spot. First, we're going to knock out our standard disclaimer. Our topic tonight is quickly identifying thrust and retracements. However, we will be going off topic to talk about many other things to help everybody stay green and make some money. So without further ado, all communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or the webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. Let's see, here's what we're going to do. I'm going to say something that I've said probably over 10 years, 500 times, maybe more. But we have a lot of new faces here that have joined the Viper team recently. And so it goes without saying that it bears to be repeated because it is the most important thing in the world when it comes to futures trading. And what is it? What is it? Before anything, trade setups, learning the tools, object trader, drawing lines. I'll give you a tip. It's none of that. Looks like most of you forgot, or maybe you never knew, and that's okay, because I'm going to show you right now. Instrument selection. So what am I talking about here? You know, I got to tell you seriously, to be quite honest with everybody here, we've worked with so many traders, hundreds and hundreds of traders, literally over the past 8, 9, 10 years, and I can tell you for a fact that everyone that we talk to, if they're struggling, and we ask them a question, what are you trading? Well, I've been trading crude oil, and I don't, I'm just lob something, and gold. Really? Okay. How's that been going? Well, I don't know. I think it's okay. Maybe, I don't know. Some days it's good, some days not so good. So, what am I talking about here? You have to try different instruments. This is the reason I'm writing this down, is because this is extremely important. This is probably one of the most critical things to your success long term as a trader. You have got to try multiple different instruments. In sim before you go live. Now, that being said, what are the criteria to go live? If you say to yourself, okay, look, today and tomorrow I'm going to trade YM. Today and tomorrow I'm going to trade the Russell. Today and tomorrow I'm going to try ES. Whatever. Today I'm going to try crude. I'm going to try crude and gold. So you do all that in sim, and you take a few days, or maybe even a week, or maybe even 2 weeks, and you get to the end of that time frame. What is the criteria for you to flip the live switch on, whether you're trading your own live capital in your own account, or you're in a combine trying to get qualified, or you have a funded account? What qualifies you to go live? I'm not being facetious. That's an actual question. What qualifies you to take an instrument live? What's the criteria? Hello? Is this thing on? Anybody out there? I'm asking real questions. You guys want to make money, right? I'm not kidding. Are you out there? Hello? Drink a cup of coffee, wake up. Maybe I'm just here talking to myself tonight. To the extent you participate in these webinars, the better off you're going to do. If you want to sit like a bump on the log and just listen, that's cool too. I mean, however you want to do it. But I'll tell you, in the long run that I've seen over the years, is people who participate and ask questions and whatever and do participate in these webinars, they're the ones that win and do better in the long term and stick around for the long haul. Because the people that are losing money are the people I'm talking to right now. I'm going to give you step by step what you need to do to get over the hump if you're losing money, and I know a lot of you are. So here's what you're going to need to do. You need to be consistently profitable before you even think about going live on an instrument. Now, what does that mean? Well, let's look at it. Here, let's just put, you have to be being consistently profitable. So when we say consistently profitable, what does that mean? What does consistently profitable mean? What is the definition of that? What is the percentage of your win rate that you should be at before you go live on an instrument? 40%? 50%? 60%? What should your win to loss ratio be in terms of profit versus loss, profitable trades versus losses? 1 to 1, 2 to 1? What is the criteria? What is the criteria that's going to allow you to determine whether you go live or not? 50%? Type in a number. 75%? If you're going to do this, if you are going to do this, and I'm speaking to you and everybody listening on this recording, if you're going to actually do this, and I type in a percentage of win rate, what should it be before you say, okay, I'm ready to flip the switch and put some real capital at risk? 50%? 60%? I see it, Kathy. I see your numbers. 2 to 1, Lewis, 85% from Kathy, 75% from Bill Maurizio, minimum 70%, 32 to 1, that's pretty lofty. Okay, you have to be let's start at this. You have to be well above 50% profitable, and I would say ideally up closer to like 75%. And this is important, and that's not a number that stands alone there, right? You can't just say, well, Charles, I traded YM or whatever, and for a whole week I was like 76% profitable. You checked your records, whatever, but I didn't make any money. Well, you go look at the records and you find out, well, what happened there? What happened? Well, it turns out that your losses were 2 times your win. Your average win was like $48, $50, whatever, and your average loss was $100. So what does that mean? Even if you're 50-50 or 70%, you are still going to lose money. Yes? Okay, so this is the other thing, is that your winner or your win to loss ratio, this is the size, the dollar size of the winner versus the dollar size of the loser, has to be at least 2 to 1. Okay? 2 to 1. Now look, you guys, everybody, guys and gals in here, it's your account, it's your money, it's your trading capital, it's your time, it's all the effort you put in coming to the room, coming to these training and all sort of thing. But you know what? All that doesn't matter. Okay? All that doesn't matter if you don't do this. If you don't watch what you're doing and find an instrument to trade, it's like finding a wife or a spouse or a husband or a partner or a long-term business partner that you're going to be in business with for a long time, or somebody that you marry for 40 years. Now, I'm not saying you're going to marry YM for 40 years. That's not what I'm saying. I'm saying that in the short term, as in the next, few weeks or few months, as the volatility remains about the same, you have to figure out what's going to go right for you. We talk to traders all the time. How you doing trading crude? Well, I don't know. I can't tell. It doesn't really seem like I'm making any money. Well, then the next logical question, what would you ask that person if you were in my shoes? What would you ask that person? Say, well, I keep trading crude, but I'm not making any money at it. Why the heck are you still trading it? So you've traded it over and over and over, and you're not making any money at it. Why are you still doing it? I mean, I'm not want to be a jerk here. Don't get me wrong. I'm not trying to be rude or mean to anybody. Trading is a business, and you've got to take it seriously. And if you continue to trade a losing instrument, you're just shooting yourself in the foot over and over and over again. You've got to stop doing that. Start doing this tomorrow. Tomorrow morning, start doing this right here. This is number one, top priority above everything else. Nothing is above this. If you can't get the right instrument and start learning how to trade it profitably and consistently, you will never succeed as a trader. Period. It's that simple. Now, how are you going to know how you're doing? I see what you're saying there, Shane. Yeah, but what I'm saying is, and I speak directly to you, and others can hopefully benefit from this, is that it doesn't sound like to me that there's been an accurate and clear assessment in this manner. It has to be systematic. You can't just pull up and say, well, I'm willy-nilly, I'm going to trade gold today, right? And then you pull up a gold chart, and the gold is flipping all over the place like a fish. That didn't work. I think I'll try it. Let me, you know what? Crude seems to be moving. Let me flip over to crude. Let's take a look at the crude chart. You get chopped up and whacked around all, beat about the face on that. Dang. Well, maybe the equities. I hear in the room the equities are moving pretty good. You come over there, the darn move's already made. By the time you're looking at it, it's done. I mean, successful traders, do you think they flop around like fish like that? No. I know every morning exactly what I'm going to trade. Now, there are circumstances where if a market's particularly choppy, I won't do it. Like ES is an example. I watch the ES chart every single morning. Every morning, Russell, YM, ES, and NASDAQ. I look at the same setups every single day. Every day, it's the same. Now, if I don't see a setup I like, do I take it? No. If I see a setup I like, do I take it? Yes. Probably because I've seen it 4,000 times before. It's the consistency of looking at the same thing over and over and over again, and then having the confidence to pull the trigger and take action that's going to make you money. Look, there's all manner of trades all over this chart, right? Let's talk about this for a minute. Here's YM is a perfect example. Look, there's times when YM's choppy. There's times when it's flopping all over the place. There are lots of times when the direction isn't clear. There's times when it's going sideways and retracing deeply and you can't see where to get in and you pull the trigger too early and get stopped out. Sure. Well, is that the instrument you should stick with? Maybe not. I mean, here's a case here where late in the morning, I think we were calling these out in the room, that, you were clearly in an uptrend here, but you get these deeper retracements. Oops. Now, I could go to every single person in this room and ask the question, getting back on topic here. In order for us to have thrust and retracement, what needs to be present before you can have thrust and retracement? A condition has to be present before you can even say the words of thrust and retracement. The thrusted, oopie doodle, I think I deleted that. Oh, I think I deleted that. Oh, no, I didn't. It's still there. If you were to go in and say, okay, I'm looking on this chart for thrust and retracement, something has to be present on the chart for there to be thrust and retracement, and that one word would be what? There has to be a what? Anybody? What needs to be there? A trend. There can only be thrust and retracement in a trend because in a range you don't have thrust and retracement. There is no thrust and retracement. By definition, you don't have a trend, so there is no thrust and retracement. Conversely, in a range you have what? Support and resistance, and it remains within a range. Now look, I'm going to say something profound to some of you. I can come in here all night long and I can show you every pullback and where you should have got in on this chart, right? And I can show you one. Here's an example of a deep retracement. Here's some more examples of deep retracements. You know, you can call them phantoms. You can call them range-bound support trades. You can call them deep bar probes. Over the years, we've called them a number of different things. They have different names. But the bottom line is that you're still in an uptrend and you are pulling back deeply to find support and then buy and get long again. Now, talking specifically about deep bar trends, retracements, phantoms, whatever the heck you want to call them. If you are not good at seeing and taking these types of trades, should you take them, yes or no? Here, let me ask the question again. It's a simple yes-no question. You type in Y, boop. You type in N, no, boop. If you are not good at seeing deep retracements in an uptrend or a downtrend, where it pulls well below the midband and then bounces, should you take this type of trade, yes or no? That's a real question. Think about it. If you're not good at seeing them and taking them, you've done them 50 times, and you know 80% were losers because you know you put a box and you get faked in here, right? Whatever, the box was too tight and you get stopped out. And then and then it comes down here and you think the trend's changing, but it isn't. So you get sucked in here and then you dump it because it came here and then you're upside down a little bit and you just jerked all over the place. Let me help you out. The answer to that question is a resounding no, no, no. Now look, is the fact that you don't like, and you as an individual, I'm speaking to everybody in here tonight, okay? The fact that you are as an individual don't like these, aren't good at them and don't want to take them, does that mean we shouldn't teach them to people? Does that mean we shouldn't call them in their live room when they set up for people to take? Does that preclude other traders who like it and take it and make money from them taking it because it's a legitimate trade? No. That's a personal trading issue of you. And I'm speaking to everybody here. That's your personal trade. And I have no problem with that. Nobody should have any qualms with that. There are going to be trades that you like and you're good at, and those are the ones you should do. Forget about the rest of them. I don't care what kind of trade you call it. If you can't make money at it, don't take it. It's that simple. Charles, I've been trying to master those blah, blah, blah trades for like a year, and I just can't get them. I don't know what it is. I keep trying, but every time they come to me, I'm different, and I lose money. Well, should you keep beating your head against that wall? No. Let me put it this way. Stop, in caps, taking trades that are not profitable for you. I don't know how to make it any more clear than that. And I'm not, here again, I don't want anybody to feel like I'm yelling at anybody. I'm not upset about this. I'm very passionate about this issue. You can tell. I'm very passionate. We do a lot of time teaching. We make a lot of calls in live room. We put a lot of effort into this business. Building the tools, teaching the people. Been doing it for a long, long time. But this bears to be said. If you have certain types of trades that you cannot take and make money at, you have to stop taking them because it's a twofold effect. Here's what's happening. First of all, you're missing other trades that could be making you money. Does that make sense? Yeah. No, you're right, Robert. Sometimes those deep retracements, they don't work out because it is a trend change and it goes much deeper than you think. And you buy in and it flips on you. If the instrument you're trying to trade, if that's doing it to you, should you keep doing it? No. I don't know how else to say it. I can't sit there next to you. I can't pull a chair up next to your desk and say, take this, take that, don't take this one. Here, just hand me the mouse. Hand me the mouse and I'll take them for you. I can't do that. So let me ask you another question. And this is really hard for a lot of traders to admit, but I'm going to ask it anyway. When you take a losing trade, whose fault is it? When you, I mean everybody in here, everybody listening to the recording tomorrow morning, take a losing trade, whose fault is it? Is it the live room's fault? Is it my fault? Is it Gary's fault? Market makers. Yeah. All right. Look, you know, you remember that old saying from grade school, right? When you're pointing your finger at somebody, you got 4 fingers pointing right back at you. So I'm going to give you another valuable tip, and then we'll get on to some other stuff. Take responsibility for your own trades. Well, that call was a bad call. That call didn't look good. Didn't bounce like you said. You missed that flip short and the thing dropped 50 ticks. Should have got that one. Is that my fault that you took her, didn't take it? So many people want to point fingers. I've said this at least 200 times. The purpose of the room is not to spoon feed you and hand you everything, right? I mean, technically, originally, it wasn't even supposed to be about trade calls. It was to show support resistance areas where you might want to take longs and shorts. That was the original intent. But the whole idea behind it is that the calls that you hear in there are something that you should already see yourself. Now, let me ask this question. I'll get off my horse here. Whose responsibility is it to see the trade ahead of time? Is it me? On your chart? On your chart, whose responsibility is it to see and take the trade? Is it Gary's? Is it the room? Is it your dog, your neighbor, your cousin, your wife sitting next to you having coffee? It is you. If you can't see the trade to take it, it's your own fault. Because you haven't studied enough, or you picked the wrong instrument, or you're looking at you aren't really grasping the system and how it works. And that's not a terrible thing. I'm not yelling at anybody. I'm not mad about it. I'm saying that you've got to do some training. You got to put some time in. Everybody wants to be spoon-fed these days. Why? I don't want to do anything. I just want to make money. You think any business is like that? Huh? You think you go into any business and just say, well, I don't want to do anything. I just come. Send me some checks. I don't have to work for it. Where's my checks? I don't want to worry about it. Payroll, doing the work, deliverables. That's just too much. If you aren't seeing the trades, it's your own fault. We give you plenty of tools and training to do it, and you need to see it ahead of time. And if you see it ahead of time, you're going to be able to take responsibility for your trades, and you're going to stop taking trades that aren't making money, and you're going to stop trading instruments where you're not meeting the criteria of acceptability to trade, like gold and oil, if you're losing money every day at them. All right, enough of the high horse. I'm done. I didn't mean to burn half the thing on this. I didn't mean to come off rough on anybody. This is important stuff. You really need to take care of yourself. If you're serious about trading for a living and making this a business, you've got to heed what I'm telling you here. Not every trade on every instrument is the same. They're all different. You have to figure out what you're good at, what you like to do, what makes you money. What instrument are you comfortable with every morning, and then just learn that puppy like the back of your hand. Now, last question. Where do you go to see how you're doing on the instrument that you're trading? Where do you go? Look at your control center. I've shown this before, but there's a lot of new people, so you might not know this. Like this whole thing we're saying here about 70, 75% profitable, win-loss ratio 2 to 1, all these things we're saying right here. Well, okay, that's cool. Well, where do you figure that out? You kind of look on your chart and say, well, I don't know. I took a couple of longs there. I think one worked out, and the other one I think stopped out. I mean, is that consistency? Is that reporting? Is that seeing how you're really doing? Is that how a business would run its business? Well, we sold 10 widgets this morning, and we got 3 returned, and the thing, and the one was defective, and well, how profitable are you? I don't know. I really don't know. I add it up at the end of the month. If I make money, I'm happy. If I don't make money, I'm not happy. Is that a business? Account performance tab. Let me show that to everybody, okay? And then I'm going to move on. Everybody who trades should do this, without exception. I do it all the time. I do it literally every day. Let me show you. Okay, let me see if there's a good way I can show you this. Stand by. All right. Let me see here. Okay, this is how you do it. At the end of every trading day, you should do this. I mean, you can choose not to do it. That's perfectly fine. I mean, I don't want anybody to misunderstand what I'm doing here in this whole rant that I'm on here. I'm not telling you what to do, okay? I'm trying to give you a path to profitability. You can do whatever you want, okay? You can say Charles is a heretic, he's an idiot. I'm going to do whatever the heck I want because it's my trading account, blah, 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 whatever. And that's fine. But if you want to have a consistent trading business that's making money that you can rely on, has some consistency and accountability built into it, then you will heed my words today. You go into your control center and you go to account performance. Now on the left here, you're going to see accounts. I have created different accounts. I've created different accounts, and I'll show you in a minute how to do that, okay? And you have different instruments right here, okay? What you want to do is you want to go in and you want to check, let's say you want to see how you did on YM. Click Advanced. You'll see your screen will look like this. You pick the account that you want to check on, and I'll show you how to do that in a second. And then you hit Generate. Now, if you want to see how you traded on YM today on, say, a YM account like that, maybe you would click on YM and then hit Generate, right? And then it'll spit it out. Where did the YM account come from, you might say? Well, let's go over here. You're going to go into Tools, Options, and you're going to go right into here. Simulator. This is the best way. Now look, if you're trading in Sim to learn different instruments like the Russell and what have you, and ES, and you're experimenting, you're in the experimental phase to find out if you're good with an instrument. You don't want to lump all your trades into Sim 101 because at the end of the day, when you sort out Sim 101, you will never know how each one did individually. This is how you do it. You click on the Accounts button. You go in here, and let's say that you want to track how you're doing on YM. You type in YM. I already have a YM, so I'm not going to do it. You hit Save. And then when you go to trade YM, you make sure that all those trades are logged to the YM account. Okay? Excuse me. Then when you come back over here, or let's say it's 6A. Let's do a hypothetical right here. Let's just do a quick hypothetical. Here's what I'm going to do. Here's what I'm going to do. Let's do it this way. Let's just start from scratch. This is really important. Everybody really should be doing this. 6A. Do I got 6A in there? I do. Okay. I don't have a 6A account. I don't rarely trade 6A. So let's go back up here. Go into Options. Go into Simulator. And we need to create a 6A account because now we're going to start trading 6A. And we want to see how we trade 6A, whether we're consistently making money that meets our criteria that 6A is an instrument we should trade. So I save this. Nope, it already exists. Huh, okay, so it's already in there. Why isn't it showing up over here? Oh, here it is. Why is there no 6A over here? Where's the instrument manager? See, it shows 6A in there. Huh. Now we're on the December contract. There we go. Okay. Whoops. Oh, what happened to my thing? Oh, what the heck? My thing disappeared. Stand by 1 second, please. Anyway, you get the idea. Does everybody get the idea? You see how to do that on the account tab? Everybody see that? Any questions on that? Anybody not know how to do that? You create a separate SIM tracking account. You pick the instrument that you're going to try. Let's say it's ES. Okay, let's say that it's ES. You create an ES account over here, ES, like that. And you trade ES, and then you say, how did I do on ES today? And you hit generate, and it will spit out a report. It'll tell you how you did on longs. It'll tell you everything. What was your profit? How profitable were you taking longs? Percentage profitable? Your drawdown? Win to loss ratio? We talked 2 to 1. Percent profitable above 60%. This is what unless you have clear, definitive reporting information on how you're doing on each instrument every day, you're never going to know whether you should go live. You're not going to know that. You're just not. Otherwise, you're guessing. You're like a person in business just guessing how they're doing. And we know how long they, generally speaking, they last. All right. Any other questions on this topic before we go on? Now, I want to do this. Here's what I'm going to do. I want to ask everybody in here to type in what the favorite type of trade you like to take before we go on. What's the favorite type of trade you like to take? What's your go-to trade? I should see everybody in this room. We got a big turnout here tonight. Everybody should take a minute, 2 seconds of your precious time and type in, you should know right off the top of your head, I love ba trade. I take it every day. It's my go-to trade. I love it. I make money at it, and this is what I do. I'll give you 4 more seconds to type it in. What trade type do you like the best? What one do you look for when you're looking for trades? Okay, we got a good healthy mix here. Mid-band, a couple of phantoms, some mid-bands, retrace to the mid-band, and the phantom is good. Good, excellent. It's not so much what it is. You should know what it is. You see what I'm saying? Lewis likes the mid-band, Maurizio, yeah. You got to know what you're looking for ahead of time. So we all know that there's 3 basic types of retracements, yes? I'll just recap them because there's some people who are brand new in here that just joined us and they might not have seen this before. We have what's called, and so let me go back first, okay, just in the sequence of determining what kind of, whether you're taking long or short trades, we need to know the market condition. And in this swath of time from about 10 this morning, this is today on YM, till almost into the close at 1 o'clock, YM was in a downtrend. So when we talk about thrust and retrace in a downtrend, what direction is the thrust? In a downtrend, the thrust would be in which direction? Up or down? In a downtrend. The thrusting part of the move. Down. That's correct. This is a classic example of a thrust and a minimum retracement trade right here. Here is your thrust. And the characteristics of a downtrend are red background, mid-band and all the bands stair-stepping down like you see here. Right? Predominantly red bars. And so the retracement part in a downtrend is the opposite direction, which is up. Now, when we think about the minimum criteria to take a short trade, what is it? I think I might have had thing paused. Coming back over here. Mouse moving. Everybody see mouse moving? Mouse moving. Moving. Down arrow, up arrow, down arrow, up arrow. Everybody see it moving now? I think I had the screen paused. Mouse is moving. It's not the amount of ticks. Nope. In a downtrend, what is the minimum criteria to take a short? Everybody should know this. This should be like learning your ABCs when you were in kindergarten. I mean, this is like from a trader entry perspective. This is the three things we're going to cover are like the simplest part of trading. What's the minimum criteria in a downtrend for you to be able to take a retracement trade, illustrated on the screen right here? It's got to close above what? Stealth line, yes. Line 2, the thin line above band 2, yes. So, in this case right here, does this retracement meet the minimum criteria for entry, yes or no? Yes. Close above stealth, red stealth, check mark 1. Downtrend, check mark 2. Close above line 2, check mark 3. Rollover, short. Now, here's a trick. I'm going to give you a tricky question here. Does this qualify for minimum entry? Yes or no? Yes. Close above stealth, check mark 1. Downtrend, yes, check mark 2. Close above line 2, check mark 3. Legitimate minimum criteria short entry, take the short. Now, continuing on down, how about these two? Does this meet it? And does this meet it? Is this two yeses, or a yes and a no, or a no and a no? Right here. Two questions, two boxes. Yes, yes. No, no. No, yes. Yes, no. That's the combination of options you have on that one. Yes, yes. No, no. Yes, no. Yes, no. No, yes. We'll call this box number 1. Yes and yes. Close above stealth, check mark 1. Downtrend, yes, check mark 2. Close above line 2, check mark 3, yes. Legitimate short entries on both, yes, yes. Good. Now, I'm going to do these sequentially in order. The 4 boxes I have on the screen are all legitimate short entries on minimum retracements in a downtrend. Yes, they are legitimate, and you could have taken them almost no heat at all, and they all made money. Now, stepping up the line, the food chain a little bit, the next one above minimum retracement is the midband. Now, generally speaking, the midband trade is going to be bounded as follows. It's going to contain the band above it and the band below it. When you enter this area that I've illustrated inside of this box, you are considered to be a midband trade. It can kiss the midband and roll. It can come slightly above the midband, as this did right here. It can be just a little bit under it. It can be sitting right on it. The bars can be yellow. They can be red. It doesn't matter. If you are in a downtrend and you come into this zone right here on a retracement, so here's the thrust from box number 4, and here's the retracement. Legitimate midband trade. Yellow bars sitting on the midband. And down you go. So we have, just in order from down to up, we have minimum criteria, these 4 boxes. We have midband trade, and then we have trades that go a little deeper. Like here. Where you go outside of the band above the midband all the way up to or kissing or slightly at or above line 6, which is the green line right here. Sometimes the bars will turn blue. Is this a legitimate short trade, deep retracement short trade right here, yes or no? Is that a legitimate deep retracement short trade on YM this morning, yes or no? Yes, absolutely. Now I'm going to ask an honest question to everybody here. And be honest with me and the team and yourself. Are you good at taking these trades, yes or no? When the bars come above the midband in a trend, okay, let's use this example. This is a downtrend, yes? We come all the way up here just shy of line 6. The bars are turning blue. And it rolls over. Are you good at taking this type of trade, yes or no? And do you know? How do you know? How do you know? Are you good at taking that trade, yes or no? You should know, but do you think it's important to know? Is that something you think you should know about your trading, whether you're good at that type of trade or not? I see a few yeses. I see a lot of no's. I see some of you typing in, I'm still trying to learn how to do it, which is good. And here's the other thing, okay? And this gets back to my original point, which was you've got to know your instrument. The depth of retracement on each instrument is a little bit different, right? NASDAQ is notorious for going very deep. Sometimes it's the blue bars that it's visually just the blue bars are a cause for concern. In other words, you see the blue, you've seen it's gone deeper, you know that the background is red and the bars are stepping down, you know you're still in a downtrend, you know that. Intuitively, in your head, you still understand that. We can teach you that, you can see that, you can know that. Even in the room, we can say you're still in a downtrend and it's retracing deeper, but you just can't pull the trigger, and whenever you do, you stop out on it a lot, and you can't make any money at it. So my question is, if that is you, if what I just described is you, you admit to yourself you're not good at it. You've tried it before. It just won't work. Should you continue to take this type of trade, yes or no? That's a simple question. Even if it's called in the room, even if you see it and you know it is what it is, but you can't trade it successfully, should you take it, yes or no? It's a simple question, and a very important question, because he's set up all day long. All day, all morning, all night, all manner of instruments. It doesn't matter. These trade types are a fact of life. They're going to be there, whether you like them or not. That's what I'm trying to tell you. So it's not up to the market to decide what you're going to do. It's up for you to decide. Look at yourself. Look at your trading reports. Look at your consistency. Look at the types of trades you took on that instrument. You took, I don't know, hypothetically 3, deep probe short trades in the downtrend, and 2 of them lost money and 1 made 5 ticks. The answer is no. Let me be explicitly. Excuse me. Hold on for 1 second, please. I'm going to just be explicitly clear about this. And I'm not speaking to just this trade type. I'm talking in general. If there is a trade type set up that you are not consistent, And I'm going to put a caveat in here, okay? I don't want everybody to just say, well, I just don't like that trade. There should be culpable evidence of the fact that you are not consistent. In other words, you have records, you have documentation, you know that you're not consistent, and you lose money at them. Then what do? Do not take these kinds of trades. And that applies universally across the board. It applies to every instrument. It doesn't. And I talk about different trade types. I'm talking about ranges. A lot of people don't like ranges. If you're not a range-bound trader and you've tried it before, but I'm going to put the caveat on this. In order for you to make the statement that you don't want to take them and you're not consistent, you have to have, as I said, culpable, credible evidence. You have to have tried it. You just can't say, I don't like that. I'm not ever taking those things. I just don't like them. I don't like the way they look. The blue bars wig me out or whatever. Well, that's not right. That's not fair. Because there's a lot of times when these trades work out and they can make a lot of money. Okay, so you can't just chuck this out the window. I suggest you give it an earnest try. Try those trades. Try trading ranges if you're not a range-bound trader. Pick your instrument and try to trade the range. Now, look, if you do that over and over and over again and you get your butt kicked, well, then it's obvious. Don't do that. Yeah, Lewis says, I'm not very good at it now, but I'm going to try to work on mastering it. Good. See, now there's a good approach. But, you got to realize that, if you're spending time trying to conquer this, and you got a ton of these little mini retracements, and you got a ton of these little mid-bands that are just cleaning up and are just piece of cake to see and take, then, maybe that's the type of trader you are. Maybe you're a minimum criteria retracement trader. Maybe you're a mid-band trader. Maybe all of it, you want the thing to come to mid-band. When the thing comes to mid-band, you make money. Well, then that's what you should trade. I want everybody, I did this before, I'm putting my pinky up and listening on the recording, pinky swear with me that you're going to do everything that we talked about here. Okay, between now and next Thursday, and I'm going to ask the question next Thursday evening when I do the webinar, I'm going to ask you, did you try some of these types of trades? Did you trade a range and it didn't work? I'm going to ask you straight up. Did you look at your record? Did you look at how you did? Where's the reports? Did you try different instruments? Did you try YM? Did you try ES? Did you put a Russell chart up? What did you do? And show me the evidence that you ran some reports to see what your percentage win rate was and your average win to loss ratio. Did you go through that procedure? Have you decided on an instrument that you're going to trade? And when you're going to trade it and what types of trades you're going to take, right? All right, I want to look at one other thing. Now, look, this is another opportunity for you. And some of you might like it and some of you might not. And I have to have a word of caution. Some days it's just choppy as all heck and you just got to avoid it. It's ES. ES is a slow mover. So if you like a lot of movement and you like a lot of volatility, don't hold your breath. Some days are better than others. I'm going to show ES in a couple of different ways for you to look at. It's going to be the traditional way we look at using a 4-range bar. Now, you can use a 4-range bar on ES. You can use a 4-range bar on ES, and it's perfectly acceptable, and you can do really well. On days where you're in a tight little 10, 12, 15 tick range, which happens a lot on ES, you can't really use. You got to use a 2. I've even used 1 on some days if it's extremely slow and I want to just sort of scalp it. Here's an example right here. This is all the way from yesterday morning through today. ES was in this range. Was this range tradable? What do you think? Here's what I like about ES. Especially if you're not particularly a range-bound trader. ES has a tendency to respect its support and resistance levels fairly cleanly. can you see how, since all the way from yesterday morning, from 7:45, all the way through 11 o'clock today, ES was in a range. Now we know why, right? Because the Fed came out today at 11, and they kept everything kind of, in a box, basically. Let me open it up a little bit. And I'm going to try something different. I'm going to show you on a 2. Sometimes you need a 2. It's not going to change the trades you take. I mean, the trade setups are all the same. Everything's consistent with the tools. Nothing changes. It's just you want to get a little more visual clarity into what's going on that the 4 can't give you. Let's go back with a 2 and look at that range again. And then we'll look at the trend moves. Okay? Now you're going to see that with twice as many bars on the chart, even a slow, choppy ES can give you some decent setups. Let's go back to that range. What day are we on here? Hold on, let me get back to today. Where the heck is today? Ah, here we go. Okay, here's the range. Oops. What happened? What's going on here? Don't freak out on me. Oh, okay. All right. Yeah. So this is what, if you're going to start looking at ES, and I encourage you to do so. ES is, if you like an instrument that can move, but it's slow, it doesn't whip you around. If you need more time to make a trading decision, to decide where to get in, I try to make some calls in the room whenever I'm trading it. If I'm trading it actively, I'll try to give you some support and resistance levels. I'll try to tell you where to put some trail stops or where resistance. Remember, I called out 28 today, and then it broke 28 and went to 30 and then 36. Remember it went to 28 and then pulled back. You remember me calling those numbers? So the range here you were looking at for 24 hours was support down here around this 20 level. Every time it came down to 19, 20 it bounced, and resistance was way up here at 28. That's 9 times 4 is 36, well above the minimum criteria for trading a range. ES was extremely tradable this whole time, 30, 35 ticks plus. You're coming down here, you're buying support. You're taking profits up here, maybe even shorting it. Profits, long trade, pullback, long trade here, comes down. 2 short entries on the flip. Where's your thrust? Here, where's your thrust? Where's the thrust? Where's the trend change? If you said right here, you are correct. Where's the retracement? Yeah, you got to multiply times 4, Shane. Yeah. So that's 30, 36 ticks there. That's very tradable range for ES. Is this a legitimate mid-band trade? Short, yes or no? Yeah, of course it is. Textbook. Let's say you got filled at, let's use a round number here, 28-ish. Plus or minus a tick or 2, whatever. Let's use 28. And let's say you didn't get stopped out till, I don't know, 11. So let's do some math here. 28, 11, 17 times 4. What's 17 times 4? Where's my calculator? Excuse me, 17 times 4, what, 68? All right, 17 times 4, 68. What's 68 times 1250? Anybody quick on the math there? It used to be when I had a younger brain. $850. No heat. Textbook rollover. Minimum criteria long retracement. Was this a legitimate trade? Yes or no? On ES, right here. See how the 2 blows up a little better? You can see, or 4, that would that'd be like 1 bar, maybe 2, but it'd be a lot more difficult to see it. See how the 2 kind of blows it up? Minimum legit criteria to take along on ES? Yeah. Uptrend, check mark. Close below green stell, check mark 2. Close below line 6. This thin green line here, check mark 3. Long, boop, boop. How about this area right here? Is this legitimate reshorting opportunities right here? Legit? Yes or no? What do you think? Short, 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 short. Even here. What about here? Yes, yes, and yes. Thank you. Excuse me. Sorry, I get a little tickle in my throat here. I don't know why. Now, what you got to be careful, a word of caution, if you're going to start watching ES, and now this is into the close here, so, okay, so what's today, 26? Oh, no, so this was yesterday. Okay, yeah, so this is yesterday. When you go through these big moves on ES, you're going to go into these ranges, okay? That's just how she rolls. If you start watching ES, you're going to see that. And then you got to decide whether you're a range-bound trader. If you're in a range with ES and it's in a pronounced range for an extended period of time, and you've tried range trading and you're not good at it, then you're just going to have to just sort of tuck ES in the corner and go look at something else. Because she's going to stay range-bound for perhaps hours and hours at a time till she breaks one way or another. And then when she breaks, she goes into a trend, and then the regular trend trading rules apply in regards to thrust and retracement. Yes? So let's advance into, that was yesterday. My apologies. My sincere apologies. Here is today. Here is today. Here is today. Midnight Pacific is located right here. So, and this happens a lot with ES, is it coming into the European session, she was sideways, all the way from over here. Here's where that range set up. At the close of yesterday was here. This is the end of yesterday. Here's midnight my time, and then here's the European session here. Here's 5:30. This is the pre-market. Here's 6. Here's 6:30. So here's the open of the equity markets right here on US. Somewhere right in there. Let me blow it up. Somewhere right in there. From the open of the market at 6:30 over here till all the way over here at 10 o'clock, how many long ES trades were there? Counting long ES trades. Everybody sees it's an uptrend. That's a given. Oh, excuse me. Counting longs on ES. Counting longs on ES. We'll give you 10 seconds to count them. $6:30 equity market open to 10 a.m. Pacific time. How many long trades set up on ES? This is the last question of the day. Please take the time to take a look before we log out and close up. How many legitimate long trades set up on ES this morning? Five seconds left. I see some 4s. I see a couple of 2s, a 3, a 5. Okay. 3, a 4 for Mario. Okay, time's up. Let's look at this one right here. Is that legit? Yes. Close below stealth. Close below line 6. Uptrend. Long trade. Now, some of you might try to make the case that this one was right here. This is kind of iffy. You break stealth. Okay, so that's check mark 1. Technically, that bar closed below line 6. Slight half of a check mark 2. It worked out beautifully. Look, that was the run of the morning right there. Look at that trade was monster. The thing went from here. Let's look at we'll come back and look at that. Was there a couple more here? Was this 2 separate ones or just one big one? It depends on how you look at it. Was that a scalp and then this was a run? I could see you trying to make the case. Okay, I'll go along with you. I'll go along with you. I'd say the correct answer was anywhere between if you called this two separate long entries, then you could say 1, 2, 3, 4. If you technically called this one entry at support, then you had 3. So, if you had 3 or 4, let's add them up. Long trade 1, 1550 to 1850 is 3. That's 12 on your first trade. Trade number 2, let's call it 19 because I don't have a lot of running out of time here. 19 to 27 is 8. 8 times 4 is 32. So a total of 44, right? Okay, and then trade number 3. I'm just going to consider this one trade. I'm not going to give this little blip. You might have got a scalp a couple 6 ticks out of that, but let's not count that. And then you went from 27 to, I don't know, 30, 31, 30. Say 30. 3 times 4 is another 12, so that's 56. 56 times 1250, $700 on one lot. 3 legitimate long ES trades, 56 ticks, or roughly $700 less commissions. Almost no heat on every single one of them. ES might be something you want to work into your mix. Like I said, not every day is perfect. You saw that yesterday, most of the morning was in a range that was tradable. If you learn to trade ranges, of course. I think on some days when it's moving, it's a good instrument to trade. It really is. 1250, you get a lot of leverage for your buck. It doesn't move really fast, So how long do these trades take? This one's set up at 6:39, and maybe you got out at 6:48, 10 minutes. Here you got in at 6:55-ish. This one didn't exit until 8. It's an hour. So you didn't get in this one. And the third one, this little bit was at 8:20, and you got out at 8:26, and then you got back in at 8:40, and then you ended the whole thing at 10. So, 3.5 hours, 3 trades. Maybe you didn't get all of them. Maybe you missed the first one. Maybe you just caught the middle one. 44 ticks. That's 5 bones. I tell you should really try to work some ES into your mix. Put a little 2 range up there and trade it in sim for a while and see if that's what you can do. Oil is good, Lewis. Most days oil is pretty good, and I think Gary's pretty good at calling out the trades on oil. Definitely. I'm not personally a big oil trader. That's just a preference. I got my hands full with the 4 equities, and I've learned that that's what I'm pretty consistent. I still help call trades in the room on oil. I know some of you trade oil with Gary early in the morning with the pit open and the trade calls throughout the course of the day. I know some of you do quite well trading oil, and that's great. That's great. If you're good at oil, keep doing it. If you want it working in and out of your repertoire, just give it a try and then track your progress on it. Trade types and what have you. Okay, that's a wrap. I'm going to turn off the recorder. Are there any final questions? Excuse me.